A very good morning, guys. On Friday, I left you with one instruction and one warning. The instruction was respect 23,800. The warning was do not sell your protection cheap into the weekend because crude was knocking on $100 and the headlines do not close when we do. So, the headlines came in over the weekend. The Red Sea is lit up again. Tankers and oil sites back to the story. The exact thing the whole market was afraid of. And crude, the number that drove us down for 5 straight sessions last week, did the complete opposite of the fear. It did not spike to 100, it fell apart. Brent is near $93 this morning, down about 5%. The driver that broke the market blinked, and our own screen is already pricing it. GIFT Nifty is up by more than 100 points, pointing to a gap up straight into the resistance I told you to respect. This is the Tanmay Edge. You are listening to episode 89. I am Tanmay Kurtkoti. Let's go. So, first the scorecard for Friday, guys, and it was a very good day for us. 4 out of 5. Full scorecard is available on rupeecase.com. Now, what happened on Friday? So Nifty closed at 23,767, down 102 points, a bit under 0.5%. That is fifth down day in a row last week, the longest losing streak of the year. But look under the headline, guys. The low was 23,606 and we recovered more than 160 points of its closed. A long lower wick, a proper reversal candle after a 5-day fall. Sensex 76,059, down 330 points, same shape, it recovered more than 500 points off its low. And Bank Nifty actually closed green, up almost a fifth of a percent. The banks led the turnaround. The VIX or the wall gauge ticked up again near 14. So fear rose one more time even as the price bought itself back. Breath was heavy at the headline, 14 stocks up and 36 down inside the Nifty 50, but the small caps quietly closed the green. The microcap index up about 0.5%. Sector by sector, it was media, IT, almost a percent with HCL Tech and TechM leading. The PSU banks green and the auto weakest, down more than a percent. Recovery with leadership, not just short covering. That was Friday. Now let's look at what has happened today and how does the 28th July, tomorrow's expiry, looks like. Friday's close at 23,767 sits just under a stack of call resistance. At 23,800, the sellers piled on more than 40 lakh fresh calls return. So 23,800 flipped from Friday's support into an shorter resistance for today. One strike higher, 23,900, is a heavy call line too. Above that, 24,000 is the main resistance of the whole board. Close to 1.4 lakh calls are present over there, the single biggest open interest anywhere, and it is still building. So the ladder we open into is 23,800, 900 and 24,000 as the lid or the final resistance. Underneath, the support is real. 23,700 holds more than 93 lakh puts, and there is a deep put shelf at 23,500 with more than 1 crore contracts as well. So the box is created. Friday's low of 23,606 sits inside, right between them, and that is the bull line in the sand. Two numbers set the tone, guys. Across the whole chain, the PCR is about 0.83. Still call heavy, still cautious. And here is the mechanic that decides today. There is a line on the options map right now around 23,800, the gamma flip line. Above it, the market pins and goes quiet and drifts towards that 24,000 magnet. And remember it, 24,000 is what we are expecting as expiry for tomorrow. Below it, move speed up, we are going to open just above that line on the gap. So whether we hold 23,800 in the first hour is the whole session, because Tuesday is a double expiry. Nifty is weekly and monthly on the same chain, and the gamma builds all day into it. The positioning, now who is holding what from the official participant file. Smart money first, and this changed in a way that matters. The professionals or the pros are long 29,221 index futures and they added to it. But look at the options. they pushed their long calls up to 2,06,503, a big add up on the call side, and they cut their long puts down to 1,26,665. Read that together. The desk that leads added futures, that is, they went long futures, bought more calls, and sold downside protection into a Friday reversal. That is the cleanest bullish rotation we have seen from the pros in the last 2 weeks. When the smart money stops paying for puts and start paying for calls, it tells you it thinks the low is held. The foreign institutions are still net short 2,70,847 index futures, but the same desk is long 5,74,712 stock futures. So it is a stays a hedged long, not a outright bear, and they trimmed their short calls. They started buying back the calls they had sold at resistance. Even the FIs eased off the short side into the close, and the clients, the retail crowd, still short the index and still short 7,02,891 puts. Now they covered almost 66,000 of those shorts on Friday. Say they took a little risk off, but sit with the number, they are still short more than 7 lakh puts with no protection at all. If the bounce has legs, that giant short put book is squeeze fuel. It pushes the market up as they cover. If it fails, they are the least protected seat in the room. Either way, they are the fuel to the whole rally or whole market crashing down. So the pros rotated bullish. Remember this, the FIs ease their shorts and the crowd is still short a mountain of puts. For the first time in a week, the positioning leans the same way as the price does. And what the world is doing today morning, the overnight board is friendlier than it has been all week, and it starts with crude, guys. Brent is near $93 this morning, down about 5% in a session, and our own crude is near 85. That is the whole macro trade unwinding, because crude at 93 instead of 100 takes pressure straight off the import bill, off inflation, and off rupee in one move. Gold is firmer at $41.05. The dollar index is soft near 101, and the rupee sits at its low of 96.56 with the single biggest weight on it. Crude finally lifting. America was mixed on Friday. The Dow green, the broader market flat, the tech side soft on chips, and this morning futures is pointing a higher open today evening. Europe closed Friday strong across London, Paris and Frankfurt. Asia is mixed but calm. Crypto is still heavy, Bitcoin around 65,000, Ether near 1900, not confirming risk appetite. So this crude relief rally, not a full risk on parity, is what is happening. And our own screen, GIFT Nifty is trading near 23,950, up more than 100 points. So we open gap up somewhere around 23,890 to 23,930, straight into the first band of resistance. So what is coming today morning, guys? The map is short and it is loud. Monday is a normal session, but it is this day before the big one. Tuesday, the monthly expiry and the weekly expiry on the same chain. The one I just walked you through. So every level from 23,800 to 24,000 gets settled tomorrow, and the gamma tightens all day into it. Thursday, the 30th, is the Sensex weekly expiry and the monthly expiry as well. Earnings season is still live, and the crude stays the one wild card because the weekend proved the news can go one way and the price can move the other way. So the plan is simple. We open near 23,880 to 23,940. If we hold about that 23,900 after the first hour, this is a oversold tape with crude falling and can extend the bounce. So the first real test is holding that 23,900, and then the big 24,000 resistance can be hit. So I respect that 24,000 line as the resistance into the expiry. I do not chase that gap. I let it prove, hold that 23,900 and 23,800 first. Lose 23,800 and back we fill the gap, and we are still under the options line. Again the move speed up, and 23,700 then 23,600 cannot be ruled out. That 23,606 is a bull's line. Hold it and the reversal is alive. lose it and the 5-day slide is back on. The wall gauge or the VIX is also low. The straddle is trading around 250. So the market is pricing a move of only about almost 330 to 340 points. A tight band of roughly 23,580 on the downside to 24,180 on the upside for the week and tomorrow's expiry. And the one lesson to carry out this weekend is that it has worked all month. Trade the driver, not the index. The whole slide was crude, and the moment crude cracked, the market turned. So today, watch Brent, not Nifty candle for the next big leg. And quick note, guys, on the all cap book, Friday was a green banks recovery day, and the equal weight book kept its pace down about 1/3%, right alongside the index. A much better day than Thursday's risk off. Since rebalance on 20th, it is down about 1.8%, almost exactly with the benchmark. The winners since the rebalance still carry the breadth story. DR Caps up more than 20%, Sterlite Tech up more than 12%, RR Cable up more than 7%, Numawa up almost 6%. 50 equal weight names, so something is always working. Over its life, the book has compounded about 44% a year. Not a call to buy anything, just an equal weight book doing its job. Next rebalance is on 3rd August, and if you want to subscribe to it, just visit rupeecase.com. The traders who win consistently are not smarter, they are earlier. You have gotten earlier, guys. Have a great Monday, 5 days of down, then they bought the crash, and over the weekend crude blinked instead of spiking. So we gap up into the resistance one day before a double expiry. Hold 23,800 and you can trade the bounce towards that 23,900 and 24,000 resistance. Lose it and fill the gap, and the move speeds up to 23,700, then to 23,580. Watch crude, not the candle. This was the Tanmay Edge, guys. If you found value in this, please share it with one trader friend who needs it right now. Subscribe to Apple Podcast, Spotify, and listen it live on rupeecase.com, where it streams first. And give it a rating, guys, and a review if you want to add something to it.